Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my good friend Tavi Costa, partner and portfolio manager at Crescat Capital. Welcome back, sir.
Thanks for having me. Looking forward to this.
Yeah, it's such a great pleasure having you come down to Wall Street Silver, especially in this exciting time in the precious metals market. Gold, silver, there's so many interesting things to talk about. I wanted to, pick your brain, get you on here. Gold's hitting $2,500 per ounce. Just 5, 6 months ago, it was at 2000. So where are we going from here? What is Tavi Costa's view?
I think we go a lot higher personally on gold, but I think what drives this time the price of the metal is going to be predicated on the dollar. I was always of the view that the dollar is the cleanest dirty shirt out there, but given research recently we've done regarding how much interest payment relative to GDP we're paying and the inconsistency of monetary policy of the US versus other places in the world, I believe that the Fed is going to be forced to do more than other places. And knowing that currencies are a relative game, is if we see the Fed having to adjust its interest rate policy more than the ECB and others, you start to see the dollar actually being impacted by that. So it's important to notice as well that if you look at the 2-year yield or the 10-year yield versus the dollar, it's basically the same chart right now. In other words, the more investors begin to price in that the Fed is going to cut rates, especially in the short end, 2-year yields, for instance, you start seeing that pressure coming on the dollar. And the dollar has broken a lot of, I would say a lot of supports, or I should say resistance, really recently, especially the euro has broken a resistance. If you've seen the British pound also broke a resistance. The Canadian dollar is yet to do it. So it's sort of like a domino effect. We've seen some of those currencies starting to move and some others haven't done it yet. So I think that that's much more of a structural problem. And the dollar will potentially drive gold prices significantly higher, in my view.
And what happens, to the Federal Reserve? People are talking about online, the Fed is trapped. The Fed is trapped. They don't know that if they do reduce interest rates, then you're going to see the U.S. dollar take a big hit. But it's inevitable. They're going to have to do it sooner or later. Do you think it'll be before elections, after elections? Do they even take an account for that, Tavi? What do you think?
Oh, I personally think it's going to happen.
Monetary Metals is offering 12% on silver, paid in silver in a historic offering, the first silver bond in over 150 years.
There's about $15 trillion worth of precious metals in the world, all sitting there. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's not easy to ship, and it costs money to store in a protected manner. This platform allows gold to be put to productive use, so instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver, paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Before elections, even because
Wow.
because we're going to be cutting rates likely before elections, and that will continue to have an impact on the dollar. I mean, if you think about it, the people have been changing their views about rate cuts and the possibility of what the Fed is likely to do, and I think people have changed very drastically to the side of thinking that we're going to see multiple cuts. I am of the view we could see the 2-year yield fall to 2%, which is way more than everybody else is expecting. And that's just, a historical look of the 2-year yield all the way back to the, 1960s or so. And you can kind of see that we broke out of a major resistance, and we're probably going to retest that resistance becoming a support. And that would be at around 2%. So if I am of that view, a couple things come out of that. Number one, hard assets, because when you have the yield curve, or I should say yield suppression in an environment like we are today with inflation,
Right.
hard assets are likely to do very well. And there's other things that could potentially change. The yield curve steepener is a very interesting metric to understand not only the risk of a recession, but also if you're a macro trader or a macro investor, those are things you're always looking for those setups. And
Yeah.
I think we have another setup like that today where the steepener or the steepening of the yield curve is just starting. We're going to see a lot more than what we've seen so far.
And let's talk about the mining side of, silver, gold, precious metals. Someone who's new to the investing side on, like, let's say the exploration or the producers, can you explain to our audience, what's the difference between an explorer and a producer, and what are the pros and cons?
Yeah, I think the main difference is two things. Number one, the producer has consistent free cash flow usually, or cash flow or revenues. It could be losing money, who knows? But it does have obviously a flow of production coming. Now, exploration is a completely different story. You're talking about a company that owns a property that is starting to drill that property and look for a major deposit or a deposit of mineral reserves. And no, the difference is not only on the type of company, but also in the type of investors. The investors that come into the producing side are more financially savvy. The guys that come into the exploration side tend to be more geologic savvy. And that's because it requires much more of a geological knowledge to understand that market. And given the fact that we have seen, geology trends in terms of interest in colleges and undergrads and so forth falling apart, makes that market specifically very, very inefficient. Inefficient is the same word for opportunity if you're an investor. And so that's
Right.
why I paid so much attention to the exploration market.
And at Crescat Capital, what do you guys focus on specifically? Do you guys focus on producers, explorers, both? What is that?
Yeah, well, we built what we think it's the highest quality assets that we find in terms of exploration assets across the globe. And our view is a few things. Usually when you have a bull market, you tend to see an M&A cycle. An M&A cycle tends to drive the majors to look for more resources. So they tend to actually bid up those companies that have high quality reserves and finding those deposits and those exploration assets that have been successful. So our
Right.
goal is always to own a big portion of those. Number two, recently we've acquired a large stake in, or actually the entire company through a leverage buyout. St. Cristobal mine, you guys like silver, it's the seventh largest silver mine in the world.
Wow.
And so to me, that you don't do those things when silver is at 30. You do those things when silver is trading at 20. It was trading at $18 an ounce when we negotiated that deal. And so, those are the types of opportunities I think it comes about in those kind of depressed cycles. But there's more to do. We're in the process of doing more acquisitions of private producing mines that have major exploration potential, so we can use our hats of growth that I think most major companies are not using. They're just focused on production, but not really the growth of production and growth of reserves. And our group is very exploration focused, and so
Mhm.
I think that's the good old days that used to be like that. And now, unfortunately, most people are very conservative and barely spend any capital looking for gold or silver or copper or any mineral really.
Yeah. How crazy do you believe, the actual flow from, let's say, in the next 5, 6 years, if people move out of the tech and the AI bubble and move to the precious metals market and move to the mining stocks, what potential upside do you see if you have a whole, like, just the whole investors from the tech side come on to the mining side?
Oh, we can sort of measure that. Back in the 60s, the fixed asset investment, so that's just all assets that were, or all the capital was spent on mining, represented about, 20+% of GDP. And today is 0.5. So
Wow.
I'm not saying we're going to go back to 20, but do the math. If we go back to 1 or 2%,
Yeah.
those are multiples of where we are. And I think there's a change in the mentality from politicians yet to occur of seeing mining as a critical industry. And I don't think we've been given that title just yet. And I think we're going to get there personally. So inflation as it stays entrenched, people are going to start thinking about what is causing that. And natural resources and the lack of supply of resources in most commodities is certainly the first thing that comes to mind. And that doesn't get fixed without a flush of capital coming into the industry. And so we need to see that at some point. And if we don't, I don't think we can even. I don't want to be doom and gloom, but I'm not sure we would even survive in this environment. So we do need to have those investments come back, and I do think they will come back. And that's why I'm investing in that. And it's funny that the level of skepticism today, that doesn't really reward. If you look back in history, times when gold prices are, starting to act like they're in a bull cycle,
Right.
which is sort of what we are today. It's shocking that people have such strong views that the mining industry will never follow that, and that's not the case. Historically, that never happened. So
Yeah, well, you need those metals to run the world. Like you need that to get done. But Tavi, it's such a huge pleasure to have you on Wall Street Silver, and I want to thank you every time you come on Wall Street Silver. It's such a breath of fresh air. So thank you so much for that. And hopefully in the future, as the gold and silver market develops, we'd absolutely love to have you back on.
sounds great. Thank you. Thanks for
Oh,
having me.
oh yeah, before you go, your LinkedIn, such a phenomenal page, your LinkedIn that you post. I'll put the link in the description below for everyone to connect with you.
Sounds great. Thanks.
Yeah, no problem. Talk to you guys soon.